Well, namaskar. Thank you for joining us here on the Economic Brief, the program where we look at key stories from the worlds of economy, business and finance, and we contextualize them from the local, zonal and global perspectives. On the show, are large e-commerce firms destroying livelihoods of small retailers? India's Commerce Minister Piyush Goyal calls a spade a spade. Is the Arctic's fast melting leading to economic opportunities at distressing ecological costs? We look at toy maker Lego's shift from oil in its bricks to pricier renewable plastic as it uses its surplus profits profitably. And we leave you with an assortment of the important business stories of the week. Okay, we're going to start by looking at what Piyush Goyal, India's Commerce Minister, has talked a little bit about e-commerce and the use that big e-commerce companies are, the method that they are using to try and take away the margins of profits of the smaller retailers. They do it subtly, is what he's trying to say. Now, he also mentioned that this might be illegal because FDI is allowed in only business to business, but the large retailers are utilizing their business in business to consumer, that's B2C, which he says is not quite allowed. And he also talks about online retailers like Amazon selling directly to the consumers. And he questions about the legality about this. Apart from this, he has talked about how, the fact that these retailers, their involvement of local retailers in the supply chain could change the way the engagement between the two are, so that the profit margins of the local retailers are not really taken away too quickly. The large e-commerce companies, are working in a gray area, is what he says, because really speaking, there needs to be some deliberation about this, and the government is seized of the matter. They're looking at it because they are quite, they are utilizing, they seem to be declaring losses in their countries, but they seem to be utilizing those losses in a strange way by cutting the margins of the small retailers in India. He says that there need to be more transparency in this, and this issue needs a lot more deliberation, which the government is seized of the matter. Apart from this, he's also talked about India's involvement in exports. India is currently only about 2% of the world exports market. It should double that to 4%. He's exhorting companies to try and export more because exporters should look at the world market, which is still about $30 to $35 trillion of trade. So despite being depressed at the current time because of the global scenario, $30 to $35 trillion of trade is the size of the market, and India should exploit that, moving up from 2 to 4% because India is growing. And the government is going to provide assistance in the sense that India is going to be dotted with industrial parks, because these industrial parks will become some centers basically for exports. So let's listen to what Piyush Goyal first said about e-commerce sites. Let's listen to what he told us.
E-commerce doesn't attack every part of the retail store. If any of you has ever studied a retail store, it may have 100 items on display. But out of those 100 items, it's not as if all of them have an equal contribution to the survival of that retail store. What does e-commerce do? We all think that, they are making things so much cheaper. If I go to a store and buy a 5-star chocolate or a box of chocolates, it's going to cost me 500 rupees. I can get it delivered on e-commerce for 350 rupees. It's because that's the item which had the largest margin. E-commerce is eating into the small retailers' high value, high margin products, which are the only products through which he survives.
Well, and Piyush Goyal also was quite clear that large e-commerce companies are using unfair business practices to gain market share. I was trying to say that, a little bit about that. And it's more than just predatory pricing is what he says. But Mr. Goyal also did later clarify that he was not against e-commerce per se. He is only for free trade. I mean, not free trade, but fair trade, and also ensuring that e-commerce platforms are not used to harm small retailers and domestic industries.
$1 billion is not coming in for any great service or any great investment to support the Indian economy. They made $1 billion loss in their balance sheet that year. They have to fill in that loss. And how did that loss get caused? They paid 1,000 crores to professionals. If you make 6,000 crore loss in 1 year, does that not smell of predatory pricing to any of you? What did that loss come on? They are, after all, an e-commerce platform. They are not allowed to do B2C. The e-commerce platform legally cannot do business to consumer, but they only reroute all the business through an entity to show that it's business to business.
So let's talk to Dr. Nilanjan Banik. He's an economist, a professor at the Mahindra University, about what the Commerce Minister said. Dr. Banik, do you think that the retail space needs more regulation? Piyush Goyal, also gave an example actually of Switzerland prohibiting geographical discrimination of prices.
So let me break it down into very simple terms. If I'm talking about price discrimination, which means that you are selling to different consumers who are located in different geographical area in a different manner. For instance, if I'm a doctor, I am charging maybe a higher price to my patient in an area which I perceive is a high income neighborhood. On the other hand, I may actually charge a lower price if my idea is that I want to practice in an area which is a low income neighborhood. Why? Because at the end of the day, be it a retailer, be it any manufacturer, they want to maximize what we call revenue. So if you are charging a high price in a low income neighborhood, then you are not going to maximize your revenue. So this is what we call third degree price discrimination. Now, coming back to the example of Amazon, or for that matter, any big retailers who are doing business in India, of course, there is a study which kind of showcased that the price Amazon is charging for similar product in Germany is least, whereas for India, it tends to be on the higher side. Now, one can always argue that what is the rationale for Amazon to charge a higher price in a country like India, where in terms of per capita income, we have a majority of the people whose per capita income is much lower than what you find in Germany. So going by that doctor example, in a way, Amazon should be charging, or for that matter, any e-commerce should be charging a much lower price in India, because the purchasing power per capita wise is much less in India as compared to Germany. But on the other hand, what we find over here is e-commerce, big giant like Amazon and others, the study showcased they are charging a higher price. So going by that narrative, maybe what our minister is saying, I don't think that
he's saying that they are charging much less actually, because they are taking much less than the local market charges. So as a result of that, because the margins were much higher on certain products. Well, let me just come back to can brick and mortar retailers actually benefit from linking with the online retailers, or should their business model be preserved? Like we seem to be losing the corner shops. Is that a problem?
So again, if you look at the retail space, you have mom and pop stores, you have big corporate houses like Reliance, Aditya Birla Fashion, Tata's, who are playing in the retail space. Also, you have e-commerce giants. Now, what is maybe happening is there is some kind of profit element that this e-commerce giant are taking away because of their big power from the supplier who are supplying and trying to sell their product through this e-commerce giant. So in that way, maybe they are taking the markup profit, higher markup profit from the Indian small suppliers of the retailers who are trying to sell their produce through this e-commerce website. which in a way is translating to a per unit higher price compared to Germany. So that was what I was trying to say,
Sure.
that they have to make up some of the profit of operating in India. That's what explained the price difference between, let's say, India and Germany. It is trying to argue that because it's a big player, they're able to squeeze the margin of the small retailers who are trying to sell their produce through their
Right,
platform.
absolutely.
So that is
it's much bigger on scale. So as a result,
yes,
obviously they can bring
yes,
down their margins, and the volumes are
right.
so much higher that they will make the profits. But do you find malls also, will need to adapt to this online market space? Because, there's a lot of investment in them, because those shops cost quite a lot of money. The buildings are kind of grand. And at the end of the day, if people are going to buy everything online, these shops also go out of business.
Hmm. Again, if I look into the big corporate houses in India, be it DMart, be it Reliance Retail, be it Aditya Birla Fashion, be it Trent, these are the big players who are operating in the retail space in the Indian market. Now, if you look into their profitability over the last 1 year, it has actually increased by leaps and bounds, which is getting translated to their higher stock market prices, at which they are trading now. So in terms of course, they took a hit. Like we know that Big Bazaar they closed after the COVID time because they are not able to open their business. But in particular, starting 2022 and until as we speak, most of these retail markets, which are operated by the big corporate houses, they are actually making money, which kind
Okay.
of tell me another thing, that if these people are making money, just think how much more money Amazon-like people are also making, because they are the ones who are actually negotiating hard with the small retailers who
Right.
want to sell their produce through through their platform. So
Okay.
the platform of always operating a scale which is much higher than what even the corporate sectors are operating. For instance, Reliance Retail or
Sure.
DMart,
Okay.
things like that.
Okay, we'll leave it there. Thank you very much, Dr. Banik. Thank you for explaining this to us. Thanks for joining us on the Economic Brief.
Thank you.
Let's move on
Thank you
to our
for that.
next story then. Do countries have Arctic ambitions? Or, simply put, are they in the race for the resources in the fast melting North Pole? Several countries are looking at this region with a lot of interest because there could be increased economic activity there. And that economic activity, however, in this fragile icy ocean will only hasten the process of climate change and consequent catastrophe. This report provides us with some context to the underlying Arctic ambitions. The rapid ice melt in the Arctic has led to a race for resources in the melting north. Longer ice-free periods means increased economic activity. And while economic opportunities abound, environmental concerns persist. The shipping routes are along Russia's Arctic coast and along Canada's Arctic archipelago. Both time and costs are saved for global shipping. Then there is the question of natural resources. An estimated 13% of the world's undiscovered oil and 30% of undiscovered natural gas, besides rare earths, gold, diamonds, copper, and zinc, are untapped. Fishing stocks, too, are moving northwards due to warming waters. The key players are the Arctic Council nations, the US, Canada, Russia, Norway, Denmark, Iceland, Sweden, and Finland. Then there's China's near-Arctic state claim and its Polar Silk Road initiative that's pushing it into play, while other interested parties are the EU, Japan, South Korea, and even India.
The Faroe Islands is a part of Arctic, and also we are a part of the Danish membership in the Arctic Council. And for us in the Faroe Islands, it's very important that the Arctic in the future will be a low tension area, and also with the new sail route, it will be a huge possibility that the Faroe Islands can be a hub for vessels which are sailing through the new sail route, and we can sell some services to these vessels. And also the climate change is very important for Faroe Islands as well as India.
The big concerns are the potential for industrial accidents in the fragile ecosystem. excessive shipping traffic, and its impact on marine life and balancing resource extraction with conservation efforts. The Arctic Ocean is particularly vulnerable to acidification as cold water absorbs more CO2. The faster ice melt in Arctic than in the Antarctic carries its own set of problems.
There are oceans, continents, and bipolar ice sheets on the Earth. If the melting speed of ice sheets in Antarctic is different from that of the Arctic, while the volume of Antarctic ice sheets is so huge that could form a large thermal difference, causing significant impacts on the global climate, the asymmetric ice sheet melting will lead to a pressure gradient difference between southern and northern hemisphere, creating changes in temperature.
However, the economic potential lies in new trade routes that can reshape global commerce, investment opportunities with associated risks in Arctic development, and the potential big impact on global energy markets and supply chains. Control over the Arctic resources and routes could shift economic influence among global powers. The Economic Brief, DD India. And Professor Manoj Pant is joining us now, senior economist and visiting professor at Shiv Nadar University. He joins us now with his take on the Arctic melting and economic opportunities. Professor Pant, do you see this trend, of racing to exploit the economic potential of the Arctic as too dangerous for the planet?
You're starting at the right point.
Okay.
I mean, start at why did the Arctic melt take place in the first? You're going to start at the right place. You can't say, here's a new resource, why are people exploiting it? People always exploit a resource because they perceive it to be free, whether it is a shipping channel or a fishing channel. But look at the problem from the point of view of global warming. And you have to start from there, not from the Arctic melt. The Arctic melt is a consequence of global warming. And I wonder now, hopefully people will finally understand what the scientists have been telling us since about the mid-90s, that the climate change is going to cause so much variability that deserts will become seabound places, rainbound or rainfall plenty places are going to become desert, and the variability of weather is going to increase enormously. Everything has happened in the last 3-4 years. We saw it during the COVID days too, and yet we are still wondering about what I think is the less important question, whether we should use the northern route as a sea route. We have been using the southern route. Has there been any problem in trade so far? So I think the important question to answer, why did the Arctic melt itself take place?
Okay, fair enough. What's the best way forward? After all, the ice is melting and perhaps the trend is irreversible, as you're saying. But indigenous communities were seen as protectors of the Arctic in the past. Now, they themselves are looking for development opportunities. So, I mean, how does one actually get all of everyone together and try and maintain the ecological balance and at the same time move for development?
Let's start. You know what they say in Hindi, Apni Gariban mein dekho. Let us start with India, right? Look at India. We have also sort of filibustered on this climate change for a long time. But in COP26 in November 21, we have decided that we are going to, what is called the nationally determined contribution. We are going to drop this by 45% below 2005 level. This is a done thing. This is part of a internationally agreed. But let me tell you what it means. You've heard of rooftop solar panels, right? What we call RTS.
Yes.
Let me tell you how bad the situation is. Only 7.3 gigawatts of power is achieved by 30th November 22, where we had planned that we would reduce by 50%. Now, you cannot achieve, with 60% fossil-based fuels, you cannot achieve climate reduction commitments as part of your NDCs if you don't bring in the rooftop harvesting. Now, just to continue in a little further panel, the Prime Minister himself has understood this when he launched his PM, Surya Uday Yojana on January 22nd this year to support roof. But have you seen this becoming a national program? It isn't. What Delhi is doing in electric vehicles, what Delhi is doing on solar power, it should not be what Delhi is doing, what Punjab is doing. It should be a national thing. And we are far behind.
Okay.
40 gigawatts, what we have to achieve. We've only achieved 7.3 gigawatts reduction.
Sure.
So I'm saying, unless it becomes a national panel, we are the ones who will suffer.
Fair enough. Yeah, but Professor Pant, you know, we're looking at the Arctic now and opportunities there. Should India view these opportunities, you know, I mean, is there a large opportunity cost if India doesn't take part, if they don't get involved? Yeah.
Well, as environmentalists tell you, it's a free rider problem. Since no one seems to own the resource, you know, on the south, we've got everyone fighting for the South Sea, right? But no one owns the north because there's the Arctic and therefore not put opportunities. Now, since no one knows the north, everyone's going to rush in to get whatever they can in terms of sea wealth, in terms of either fishing or whatever.
Yes.
I believe India should take a lead in demanding that there should be a common control on these properties. Just like we have a method of regulating trade, saying don't do this because if it's good for you, it's good for me, and we'll both suffer. I think bringing the Arctic very quickly now, or the control of Northern Sea resources under what I would call global regime is a very important factor. If we just go and say what's good for us, then Russia will do whatever it can, the Canadians do what they can, the Swedes, but we have to bring this as part of climate control of natural resources. What is required is common property, not private property.
Okay, we leave it there. Thank you very much, Professor Pant. Thank you for being with us. Professor Manoj Pant, expert on this matter. Thanks for your views. Now, moving on, Lego, which is regarded as the largest toy company by sales, it's increasing the number of sustainable materials that they use for their products. In fact, their profits have been increasing, and the management now believes that it's time to invest these profits wisely. Aman Kumar Himanshu reports.
An inflation-fueled sales slump hit the toy industry in the first half of 2024, but there is one company which is gaining market share brick by brick. The world's largest toy maker, Lego, announced its earnings for the first half of 2024 as it achieved double-digit revenue and sales growth. The Danish company said its first half sales rose 13% to $4.6 billion, while net profit rose by 16%. The Lego Group's CEO said, and I quote, "We are very pleased with our strong performance in the first half of 2024. We delivered double-digit growth on the top and bottom line and made significant progress on increasing the amount of sustainable materials used in our products." Top-line growth was driven by strong demand for its large and diverse portfolio, especially in Americas and Europe. At the same time, the Lego Group continued to increase spending on strategic initiatives such as sustainability, retail, and digitalization to support short and long-term growth. And this led to Lego's strongest first half ever. The Lego Group is best known for its plastic bricks. It has launched around 300 new sets during the first half of 2024. The company also recently announced that it was forming a partnership with Nike to develop products and content together. On Wednesday, the Danish company said it is on track to replace the fossil fuels used in making its signature bricks with renewable plastic as sales and profits surged.
Today we are pursuing a road where we are using the mass balance approach, meaning that we are taking virgin fossil fuel out of the mix of our materials and increasingly putting sustainable materials in, so that could be recycled materials or bio-based materials.
The move comes amid a surplus of cheap virgin plastic driven by major oil companies' investments in petrochemicals. Plastics are projected to drive new oil demand in the next few decades. Now, Lego is aiming to gradually bring down the oil content in its bricks by paying up to 70% more for certified renewable resin in an attempt to encourage manufacturers to boost production. The Economic Brief, DD India.
Well, that brings us to the end of this week's Economic Brief. Thank you for your time and for your company. We leave you with business stories of value that as we end the show, these are stories through the week. Namaskar and thanks for watching.
India celebrated 10 years of implementation of Pradhan Mantri Jan Dhan Yojana on Wednesday. Prime Minister Narendra Modi praised its impact on financial inclusion and women's empowerment. Indian government approved 12 industrial smart cities in 10 states to boost domestic manufacturing with an estimated investment of around $3.37 billion. An $8.5 billion merger between Disney and Reliance Industries has been provisionally approved by India's competition watchdog. The venture will create India's biggest entertainment player, which will compete with Sony, Netflix and Amazon. Qantas Airways announced an additional share buyback plan of up to $271 million as the Australian flag carrier reported a 16% decline in annual profit due to rising fuel costs. South Korean president pledged to reform the country's multi-billion-dollar pension scheme as the looming demographic crisis threatens to upend the payment system stability. Chinese tech giant Huawei reported hefty jumps in first half revenue and net profit on Thursday. Net profit for January to June climbed 18% to $7.7 billion, which is highest since 2020. Spain's inflation rate fell in August for the third consecutive month as fuel and food prices eased. Spain's inflation was 2.2% year-on-year in August, down from 2.8% in July. The Swedish economy shrank in the second quarter as household spending and investment fell. The country's gross domestic product contracted by 0.3% compared to the first quarter when it grew 0.7%. The Japanese government has upgraded its economic assessment for the first time in more than a year on signs of improved consumption, fostering optimism for a broader recovery. The board of chip manufacturer Nvidia Corporation has approved a buyback of its equity shares worth $50 billion. The announcement came after the Wall Street was left disappointed with its earning report. Economic Brief, DD India.